Liebe Zuschauer, herzlich willkommen zu Inside Wall Street vom Parkett der New York Stock Exchange. Ich bin Manuel Koch und bei mir ist Brian Barnier of Value Bridge Advisors. Thank you so much for joining us.
Thank you, glad to have you here.
Brian, interesting days are ahead of us. The earnings season, we will see very important numbers next week, but we saw already Alcor, JP Morgan, Wells Fargo, and they were better than expected.
Yes, the big concern that everybody has is top line, and that's why some of the recent numbers are good that their top line are out. Because right now we still can see that revenue rules, and we're concerned about getting that, because that's one that's really tied to the overall economic growth, and we're clearly been light on that, and the consensus estimates are for that to be going down. They were just revised down a point in the last 30 days.
So, for example, I read that the expectation of the Alcor earnings were 1 year ago 70 cents per share. We had 7 cents per share for this quarter. So we see a big gap between this. Is it just so low that all of the companies can jump over these expectations, or do we see a real market?
Well, we have to separate sort of what the expectations are and the revisions and everything, because that's just sort of noise. What we have seen is the collective analyst expectations reported by Zacks from a year ago to now have dropped about 3.8%. Further, right now they're looking for top line to drop by another 4%, boom, for the following year. And at the same time, they're looking for earnings to improve by about 9% overall. On top of that, decreased sales. So that's really the concern that we have out there. Future is not looking that good. And we've got this big stretch for companies, and the only way they can make that is by cost cutting. Well, from reductions in equipment and reductions from labor, both of those feed back into the economy, and that becomes a scary thing, which is why I say monetary policy is so important.
But companies cut so many costs already, so there's not so many space left to cut more.
And that's exactly the case for an individual investor watching this, reading through the earnings. You want to look through the different margin levels, because gross margins have been hit a little bit. And as you go down, the bottom margins are actually holding up pretty well, which means they're really squeezing to get those numbers. Also, the earnings are not as clean as they used to be. You've got more extraordinary items in there. So an investor really needs to read down all the way through the earnings release to understand that.
In general, what do you expect of this week? We see the big companies, Google, IBM, Intel, all the big names are publishing numbers.
Right, so as we're coming out here, it's not so much what the individual companies are doing, although we've got some sector bellwethers in there, it's where are we seeing that trend line going? Because with the monetary action and everything else, we're already looking out beyond the end of the quarter and through the end of the year, and you see what's happening in the rate changes. So it's that pattern along with the economic data that's going to be very important next week. And that's why we need to be very concerned about things like the split in the optimism that's out there. They're looking for about 10 points more in some surveys, but in others they're dropping, and we're trying to find our way through that.
Another big topic is still the US Central Bank, Fed. Every word is so important for the market, and it could move the market up and down. So what do you think? Will we see a tapering this year? Will we see it next year?
The key behind that is, you're right, it's every word moves it. And there's a reason. It's because people aren't listening, so they go onesies and twosies, individual words. On the other hand, the Fed has been extremely deliberate, extremely clear in what they're trying to do if you read through the whole release. And if you do that, you understand, especially the chairman's reference to driving a car, is just taking his foot off the accelerator if you're starting to go so fast that you're going to fly off the racetrack. But if you're not, then he's going to keep that down there. And that's when we get into things like employment duration, those that are the longer term unemployment for economic reasons, things like this, and the strain of the market, the asset prices above the real market performance, because eventually he's got to bring those together. All that is laid out in the minutes of the press release, and people just aren't reading through to see that all of that's there.
The labor market is so important for the Fed's decision in the end. We saw in June an increasing market. It was better than expected. So we are just looking for a stabilized labor market that we see some month in a row, a good number.
Well, we're looking for several specific things. One, duration to continue coming down, and it has. In the past month, it's dropped about a little over a week. So that's good, but it's still at historic highs. Second, we're looking at the quality of the jobs, jobs with benefits, jobs with better wages. And then third, we're looking for those people who are displaced for economic reasons to come back into the workforce, find jobs and be taking those. And then we're looking for people with enough confidence that they'll still have a job to continue spending. So all those elements are very important here.
So in the end of the week, what do you think? Are we lower or higher?
Well, that's a whole bunch of speculation that's out there. The thing that I've got my eye focused on is for the end of the quarter and then the end of the half, because that's what's going to give people real confidence to do something different investor-wise. So that's what we want to have their attention if you're at home reading this and thinking, what do I do with my personal investments?
But what do you think? Are we lower or deeper in the end of the quarter, maybe, in the end of the week, end of the month?
Right now, the consensus is showing that we're going to have some unpleasant revenue surprises. The question is how much of that is baked in, and we'll have to see how that comes out.
All right. Brian Barnier of Value Bridge Advisor. Thank you so much for your time. I appreciate it. Und Ihnen, liebe Zuschauer, vielen Dank, dass Sie eingeschaltet haben. Wenn Sie mehr Informationen wollen, dann schauen Sie doch auf unsere Homepage auf www.drf.fm. Ansonsten sehe ich Sie bald wieder hier vom Parkett der New York Stock Exchange.